This is the Crowdcrux Crowdfunding Podcast with Sal Brigman, where we cover everything you need to know to launch a successful crowdfunding campaign. We speak with proven entrepreneurs who've raised money from the crowd and want to teach you how to do the same. Stay tuned because we're about to reveal how to launch your dream project. With your host, Sal Brigman.
What's up, crowdfunders? Salvador Brigman here with the Crowdfunding Demystified podcast, and I have a very, very exciting announcement for you, which is that my YouTube channel at youtube.com/crowdcrux recently hit the very first 500 subscribers. Man, thank you so much if you decided to take a second to subscribe to my YouTube channel. To think of like 500 people, geez, that fills an auditorium. Like that fills a really large room. And to think that I'm speaking to that many people, I'm helping demystify crowdfunding for that many people. It's extremely humbling. Like there's no other way to say it. It is very, very humbling. And I genuinely appreciate the fact that you took a second to subscribe to the channel. That's a new effort that I'm doing. I have never done YouTube before, and every single week I'm trying to get better at the videos, trying to put together more high quality videos, make them more entertaining and interesting, and make it just more fun to consume information about crowdfunding. The other thing that I want to say really quickly before we get into this episode of the podcast is I want to give a special shout out to two members of the community. First of all, So Not Hollywood, who left an iTunes review on October 6th saying, "I've been visiting Crowdcrux for well over a year. There's a wealth of information and resources on this site, from the forums to the blogs to the podcast. Everything you need to know is right here. Thanks, Sal." Thank you, So Not Hollywood, for leaving that iTunes review. It means a lot to me to be able to share information with so many people and also get feedback like that. It just makes my day, makes me smile. So thank you for leaving that review. The other one I'd like to highlight is Meg Rainey, who also left a review on October 6th saying, "Lots of sites to look for crowdfunding information, but Crowdcrux nailed it. Everything I was looking for and more. Thanks, Crowdcrux." Thank you, Meg, for leaving that iTunes review. I appreciate it. This is really just like a barometer for the show for me so that I can get feedback. I also always invite critical feedback. I'm always trying to get better at bringing better guests on the show, about talking about more relevant topics. So I am always trying to get better with the Crowdfunding Demystified podcast. So if you decide to leave an iTunes review, I would appreciate that a lot. You can go to crowdcrux.com/rate on iTunes if you're on your desktop, or if you're on your smartphone, you can just open up the iTunes app and leave a review that way. And also you can hit subscribe so you'll get notifications about new episodes that are coming out. But today's episode is going to be a interview style episode. So I brought on Nathan Rose, who wrote the book Equity Crowdfunding: The Complete Guide for Startups and Growing Companies. This is a new book that's coming out on November 1st. And basically what he did, Nathan comes from a investment banking background, and he also works at a company called Assemble Advisory. And these guys help startups raise money. Thus far, they've helped raise over $11 million, and they also concentrate on equity crowdfunding. So what Nathan did is he took all of this knowledge and then he went around and interviewed various platforms in the equity crowdfunding arena. So these are some of the top platforms that are out there. He talked to them, he figured out what the differences are, and also he interviewed some of the major players, the major companies that raised money through equity crowdfunding, and distilled all of this knowledge into one complete guidebook. And I basically brought him on the show to give you a little bit of a teaser, some free information. This is a lot of information that, he might be paid for consulting or something like that. So you should really take advantage of this. But this entire podcast is going to be about equity crowdfunding. What do you need to know if you want to raise money for your company? Who is it for? What are the costs that you will incur if you decide to raise money with this medium. What do you have to do to be successful? All of these different things we're going to be talking about on this podcast. And I also do nerd out a little bit on the podcast. Like, we do talk in mainly about like beginner topics, things that if you have no idea what I'm talking about when I say equity crowdfunding, this is the episode for you. But I also go into some more technical topics, things that I myself find interesting. So you have to bear with me just for like maybe 2 or 3 minutes when we talk tech chops, and we're crowdfunding nerds. So what else are you gonna say? But I hope that you enjoy this episode of the podcast. Let's get to the crux of this episode and get to my interview with Nathan Rose. Nathan, welcome to the Crowdfunding Demystified podcast. Excited to talk with you about equity crowdfunding and your upcoming book, which I believe is coming out November 1st, Equity Crowdfunding, the complete guide for startups and growing companies. Welcome to the podcast.
Salvador, it's great to be here, and I'm really excited to chat to you and to share what I know with your listeners.
I've been looking into your book. You've done a lot of different interviews with some of the major platforms out there, some of the great companies. Looks like you've also raised around $11 million for startups. Congratulations on that. I'd like to get a sort of a sense of your story. When did crowdfunding come into your mind? What's your relationship been like with equity crowdfunding? Get a little bit better picture of your story.
Yeah, sure. So my background before I started my own firm was investment banking. So I'm a reformed investment banker now. I helped out with a lot of different transactions in my time in the corporate world. There were bonds, which were really boring, but the most exciting part of the job was early stage initial public offerings. So those are where a company goes onto the stock market for the first time, and it's really the first opportunity for them to tell their story to the investing public. So when I saw this thing called equity crowdfunding come along in 2014 in my native New Zealand, it had a lot of parallels. So it was enough to make me jump ship and decide to go out on my own and help out these startups with the similar type of advice that they need to raise the money and to grow and achieve their dreams.
And what's your role at Assemble Advisory?
So I'm the director, as in I am helping out companies with whatever they need, really, with equity crowdfunding, whether it's something that they should do at all, forming a marketing strategy, working out a valuation, because this is something extra above the world of Kickstarter and Indiegogo. You actually got to value your company, and then just stepping them through it with one-on-one coaching.
Okay, and the companies that you've helped thus far, it says you've raised over $11 million. Are these equity crowdfunding offerings? Are these small startups before doing like their seed round, or like how could you tell a little bit about that?
A real variety, actually. A real variety of industries and stages. One company was doing $100 million in revenue. So that's, I think, by any definition, past the stage of a startup. Others were really just getting started with very little revenue at all. People do equity crowdfunding for different reasons. There's the capital raised, of course, which is a big part of it. But there's also the marketing benefits and the publicity that comes with it. And some companies are doing it just for that alone.
Okay, and have you, like for these companies, just want to get an idea here, these are all companies that have raised money online for their round, or have they also been offline raises?
Yeah, so the 11 million is a combination of both offline and online raises, but equity crowdfunding is definitely the speciality, I suppose, or the flavor that I have my little bent in.
Okay, very cool. I think it's great that you have just a strong background in finance. That gives you a lot of great chops going into the game. You already understand it. I'm sure you have a lot of information that you just coalesced into this book. So when did you actually decide to write this? Because investment banking versus getting into writing a book, and I've written several ebooks myself, it's a very different game. So why did you decide to educate about this?
I just saw that there was a lack of education out there. When I did a Google search of equity crowdfunding books and went onto Amazon and did the same thing, there are a few books out there, but none of them had gone ahead and talked to actual equity crowdfunding campaigns. Right, so they're the real experts. They're the ones that have done it before and have been through it.
So how many have you spoken with, or how many interviews did you conduct? Could you give the listeners a little bit idea of what they could expect?
Sure. I spoke to 20 successful crowdfunding companies, equity crowdfunding companies throughout the world. So that's in North America, Europe, Australia, New Zealand. And I also spoke to 12 of the leading platforms, again, from all over the world, and a bunch of other various experts like me who are in the space. So I think it's a pretty comprehensive look of equity crowdfunding and where it's at and how to do it.
One thing that I have noticed when I was just looking through the various interviews you've done, it seems like a lot more are concentrated in Europe or UK. Have you done any interviews of US companies or US platforms?
Yes, I spoke to Republic, which is a US equity crowdfunding platform. They have been started by AngelList. It's a new brand, though, to separate what AngelList do from this new Title III crowdfunding in the US. I haven't got any startups from the US in the book just because it's so new, and well, the Title III rules only came through in May this year, so there haven't been a lot of case studies. The Europe-centric focus is just because it's been going on for longer there, and consequently there's more examples to draw upon.
Exactly. You guys were ahead of us in that game. We just finally got there.
Kind of strange, right? Because everyone thinks, United States, Silicon Valley, it's where all the startups go, but in equity crowdfunding, you guys were a little slow to change your laws, but you're there now. So it's going to be really interesting over the next 2 or 3 years to see what happens.
Finally. Yeah, we're finally there. I think that when, at least I have been writing ebooks, I've always noticed a bit of a transformation. You know, I had a view of how some subject operated or the best practices, and I learned that as I started to write the book, I actually started to learn a lot more in depth about the material. So I'd like to sort of nail down what your conception was of equity crowdfunding and like what you've learned since writing this book. What you've learned in terms of the impact it has, or you can really take this question as you'd like.
Yeah, sure. Well, I think my conception changed a lot when I spoke to other entrepreneurs beyond the campaigns I'd helped myself, because when you talk to such a diverse range from all over the world, they have different ideas of what's worked for them and what hasn't worked for them. Well, I think it's less of a social media or just being able to rely on these blasts or rely on likes and shares and tweets to get you to your target. That was one of the big learnings. I think another thing that transformed was just how different the various crowdfunding platforms are out there, because you do a lot of research in the course of writing a book, as you say, and a lot of detail emerges, particularly from around the world, which you're certainly more aware of after writing the book than before it. So I think those are the two takeaways, that marketing needs to be done in a different way than pre-book writing, and also that the platform choice is absolutely even more critical than I previously thought.
So let's dig into that first point a bit. In your opinion, or what you've researched then, where does the focus need to be, if not on these, social media blasts, as you said?
I think it has to be in talking to your existing audience a lot more. So if you've got a list of existing consumers or existing relationships, you should be really doing targeting and retargeting of that group to a much larger extent. And then when your campaign is live, you should be trying to lift them up to invest more, because it's a very well-known thing that it's easier to sell more to someone who's already bought from you. I'll give you an example. There was a company that raised crowdfunding through Crowdcube in the UK, and their offer was struggling a little. So what they did is they sent out a message to people who'd already committed a small amount to their campaign and tried to bring them up to a higher level by offering them a lifetime supply of honey. They're a honey company, so that's what they did. And the impact was immediate. So by being able to sell more to those people, that was important. I think the other thing is doing more offline outreach. Just because it's got the word crowdfunding in it, people think that you should run it just exactly the same as a Kickstarter or an Indiegogo campaign. But there's a lot of value in equity crowdfunding to going up to investor pitch nights, reaching out to angel investors. Like you might find one angel investor who puts in half of your round just by themselves. So you should spend time in proportion to people's ability to put money in.
I had to interrupt this podcast episode because I want to introduce you to The Gadget Flow. If you haven't heard of them, their product discovery platform has over 5 million regular monthly visitors. They have over 100,000 subscribers. And if you want access to this massive marketplace, you can go to thegadgetflow.com/submit, and they will help you promote your Kickstarter or Indiegogo crowdfunding campaign. Also, use code CrowdCrux20 for 20% off of all of their offerings. Again, that is thegadgetflow.com/submit. Well said. I actually don't know too much about investment banking, just like very broad strokes, but I did want to ask, does this compare in any way to when you are trying to sell the securities of an upcoming public company and finding investors for those securities? Have you been able to apply anything from that background to getting investment through equity crowdfunding?
Yeah, there are similarities and differences. I think one of the big similarities is in telling the story and telling the story in an investment way. So a lot of entrepreneurs are very good at explaining the product that they've got and all the features and why people should buy it. People are less good at explaining the business model and explaining that in the language that investors talk. So I guess that's my speciality, that if I get a founder with a sales background or from a technical programming background, I can take whatever weird and wacky invention they've got and explain it and how it's going to make money, what their business model is. The difference is...
Oh, sorry. Keep going.
Go ahead.
I was going to say, when you do actually craft that story, and then in the investment banking world, you're sort of shopping that around, is this to like an existing list of customers? Like, how do you generate that list out of curiosity?
In investment banking?
Yes.
Yeah. In investment banking, there are things called institutional investors. So they tend to be pension funds or groups which are sitting there with money ready to invest. And there are strong relationships with those guys. So that would be how it was done there. But I think it's different somewhat in equity crowdfunding because instead of these big pension funds, you're instead talking to angel investment syndicates or venture capital funds.
Okay. And are these also non-accredited investors, as we would term in the United States, that you're shopping this around to? Like everyday investors, retail investors?
Right, but the way that you reach those retail investors needs to be different because if you're looking to raise $10 or $100 at a time from people, you obviously can't go around meeting all of those guys individually. So you've got to do that through some of the smart things that the crowdfunding that you're very aware of uses, like video and social media. If it's going to work for your particular business, not for every business it works, but for some it will. But yeah, you should spend time, I think, this is a big takeaway, spend time in proportion to people's willingness or ability to invest. So if someone could cut a check for $50,000, then yeah, it's probably worth going out and meeting them. If there's a maximum of $100 that they can go ahead and invest, then you've got to do it through online channels.
If I was listening to this podcast, I'd be hearing about these companies which are milking their existing network. They already have these relationships in place. What about those companies out there that don't have any kind of clout, if you will? They're looking to do their initial seed round. Is this too early for them, or do they just need a different approach?
Yeah, so seed round can mean many different things. Seed round could be like really at the idea stage where they just think that here's an idea and they have no implementation towards it. I think for those types of companies, equity crowdfunding won't work. It can be done pre-revenue, but you should show some steps towards implementation. Like, have you got users at least? Has there been some proof of concept? And the later stage the business, the easier it's going to be. But unlike Kickstarter, Indiegogo, you have to go through a pretty rigorous screening process to even go live on the platform. I mean, of course, Kickstarter, Indiegogo, they do some diligence into the campaigns that are listed. But I would say the acceptance rate is much lower in equity crowdfunding. I think it could even be as low as 10% of those companies that apply to go live on these platforms ultimately get through for even the public to be able to see them. So that gives you an idea of what lies ahead of you to convince the crowdfunding platform that you'll be able to list on their site.
Okay, so you really need to at least have a prototype or some traction there. Have you noticed any commonalities among the types of companies that this is good for? And to give you an example here, on Kickstarter, some of the most popular categories are technology, design, hardware products, board games, these types of companies. Have you noticed any kind of commonalities at all interviewing these companies or those that have gone through Assemble Advisory, if it's like an e-commerce versus a software company, or is this just good all around?
I think there is some overlap between the Kickstarter Indiegogo world. So like a beer company or a board game company could, in theory, use equity crowdfunding. But I think the world is limited in Kickstarter Indiegogo to products, right? To things that people want to themselves buy. Equity crowdfunding is also open to software or to B2B service companies or to fintech companies. So I think this is the additional use of it. I think to get into equity crowdfunding, you do need to at least be scalable. So your business needs to have some kind of possibility that an exit could be achieved, which just means that at some point the company will be sold and the people who put their money in through the crowdfunding platform will have a chance of getting a return. People know that it's risky, but there has to be the potential there.
There has to be some kind of either IPO or the company's going to be sold in some way.
Exactly, yeah. The other thing that I have noticed is that equity crowdfunding will work better for companies with some kind of socially responsible or sustainable angle to them. So if you tell a story about it being really profitable, that's great. But if you can say it's profitable and it's changing the world in some positive way, then I think equity crowdfunding investors tend to be the sort that want to use their money for good, as well as obviously make some profit, which is what all investors are ultimately looking for too.
Okay, this is a lot of good information here. It's clear you really did your homework, and I have a lot more questions for you. But before we get into the more in-depth advice you have for entrepreneurs out there in terms of how to raise money, the best tips you have for a campaign, etc., I want to get an idea of some of the major platforms that they should be checking out. So what would you say are the top 3 platforms in this space that should be on their radar?
Right. So one thing about equity crowdfunding is that the platforms are much more region by region because it's an offer of securities, it's an investment. In the US, it means that it's regulated by the SEC, and in the UK, it's regulated by the FCA. And as a result, you don't have the same global platforms, which are just everywhere in the world, because each platform needs to register with its own securities commission. Having said that, let's talk about some of the big ones in the US. There's WeFunder, which in the early going of Title III crowdfunding has been by far the biggest. In the UK, there's Syndicate Room and Crowdcube and Seedrs are 3 of the big ones. And in my part of the world, New Zealand, there's a couple of players which are bigger than the others, which is Snowball Effect and Equitize. So those are some to check out for your listeners.
Okay, and just curious about your view on the UK. Are there any differences that you've noticed specifically between Crowdcube and Seedrs? Those are 2 huge ones that have been on my radar in that area.
Yeah, there are differences. We get into a lot of technical detail here, but one of the important things is Seedrs runs what they call a nominee structure for all of the investments that they do. So effectively, the people who are putting the money in don't become shareholders directly in the company. Instead, they become investors in a special purpose entity which Seedrs sets up. And what this means is that they get a lot more in the way of investor protections that way. Again, you can get
And
very
also,
quickly into financial jargon here, but it's an important difference because it means that the investors, I think, are more protected with seeders, whereas Crowdcube has more flexibility. On the other hand, where companies can instead offer non-voting shares, and some would say they have more of a direct connection with the investors because they hold the shares directly in the company and not through an intermediary.
okay, that's actually really interesting to me. I also imagine that the entrepreneurs are then dealing with the one special purpose vehicle versus a lot of different investors. It might be a little bit different on the management side.
Exactly. So some entrepreneurs will be worried about this idea of having hundreds or thousands of new investors and what it's going to take to manage them. Having that intermediary company can mitigate some of those concerns.
For those listeners in the audience who are wondering, okay, this sounds great, like my company is at a stage where I could do this, what kind of financial costs could they envision for a raise like this? Like, how much are they going to have to spend to be able to raise money on one of these platforms?
Well, as you'll be aware, Salvador, it depends on how much they can do themselves versus how much they're going to outsource to professionals. I'll give a range. I think if you can do all of the work yourself, as in crafting the information memorandum, putting the video together, you do your own PR, and you've got a big list that you can market to. And if you use a platform with well-established legal templates, then you could do it for almost nothing. But if you need professionals to hold your hand throughout the whole process, then the costs can mount up. And I think at the high end, it might be maybe $30,000. So you should really only be looking to take that kind of cost on board if you're looking for a pretty large raise and have a good chance of ultimately getting there as well.
Are the legal barriers now like very templateized or very standardized where you can just like look at these templates and pretty much like fill them in, or are they very specific from company to company?
I think it's less from company to company and more from country to country. So in Canada and the US, there is more in the way of a need for legal review, but the sections will be quite well defined, right? You need to fill in a standard form, but you probably will need to have a lawyer review it all with you. Places like New Zealand and the UK, there is more freedom as to what you can disclose, but ultimately you need to think that you need to disclose enough to get investors to come on board. So I would always advise people to tend towards more disclosure rather than less.
Okay. So what I've taken away thus far is that number one, we should be focused on the region, not so much the platform, and within that region, be looking at the various platforms out there. Number two, there's a lot more marketing that goes into an equity crowdfunding campaign that we probably don't realize. So you have to be willing to actually go out there to shout about your campaign, to develop relationships, build an email list, etc. And I guess number three is just how it's kind of crazy to me how much equity crowdfunding has grown and all of these different platforms, all of these different companies that you've worked with that are now raising under this structure. It's pretty cool to me just how that is now a thing and becoming way more mainstream.
Yeah, it is becoming more mainstream, but I do still run into this problem where I tell people I do equity crowdfunding and they still think I do Kickstarter and Indiegogo. So there is still more of a need for education, but especially in the US, now that Title III of the Jobs Act is active, you're going to hear more and more about it.
For the people that you do announce this to, like, hey, I'm part of the equity crowdfunding revolution, or I just wrote this book on equity crowdfunding, what are some of the top frequently asked questions that you get after that? So I'm sure that someone in the audience likely has one of these questions other than the ones that I asked you. What are some of the other frequently asked questions that you get?
How long is it going to take is a big one. So I guess when you look at a successful crowdfunding campaign, it looks very easy because all you see is the campaign page. Again, you'll be very aware of this too, and it just seems like the money's pouring in, but you don't see how much work has gone into crafting that campaign page, how much outreach has gone in. So I think you need to schedule, I would say, between 2 and 3 and maybe even more months into that, and also just how much work it's going to take. If you're a startup, you've probably got 1,000,001 things to do, and all of them seem to be at the top of your list. So adding a fundraising exercise into the equation can be a major distraction from other stuff that you need to do with your business. So those are a couple of the things that I set people straight on pretty early, that it's not going to be easy and it's not a silver bullet. And as well, there are some disadvantages to using equity crowdfunding which need to be discussed too. Like, what if your offer fails? It's going to be a public failure, versus if you go to an angel investor or a VC, that failure is never going to make it out of the boardroom. So a failed equity crowdfunding offer can have a negative stigma to it, which is why it's so important to get everything right first time.
I actually agree with that also, but I think that one of the parts of, in some ways, being an entrepreneur is you have to be all right with public failure, but definitely it's going to hurt your brand, unfortunately. And I think that you also nailed that on the head, that even doing a non-equity crowdfunding raise is going to take time away from running your business. So in my opinion, you're going to be spending time either way on the fundraising process. It's just that the set of skills might be a little bit different with equity crowdfunding, it seems.
Yeah, that would be fair. Equity crowdfunding is a marketing exercise, so if you don't back your team's ability to execute on a strong marketing plan, then it's another tick in the box for going the pure angel funding route. But I think the really nice thing about equity crowdfunding is it is able to achieve two of the most important things that a startup typically is trying to do at the same time, right? Most of the time, startups are trying to get funding and they're trying to get brand exposure. So by doing a crowdfunding campaign, you can do both at the same time.
Of the various companies that you've worked with, do you think they're going to come back and do another round on the equity crowdfunding platform? Or do you think this is just like a one-time thing where they're then going to go to regular VCs and, raise like 20 million or whatever, the scale is?
You can definitely do it more than once, and I've seen it done more than once, and it's absolutely an expected thing. But you should just make sure that when you come back that second time, you can show your businesses hit some of the milestones that it set out that it was going to do the first time around. And if it hasn't, or it's had to pivot, you need to have very strong communication in place as to why that's been. But yeah, ultimately, people will love to hear that you've raised money the first time around and you've used that money to grow and expand, and you're back a second time. Your valuation's higher. The first investors have made money, so here's another opportunity to get in.
I have two or three more questions for you, and one of them is kind of technical. So before we get to that, I just want to ask you, if you were to speak directly to an entrepreneur in the audience right now, and they have no idea what equity crowdfunding is, they've been listening to this interview, like they're getting a sense for it, what other bit of knowledge would you like to pass on to them? It could be a way to direct marketing. It could be something that most people have a misconception of. What would you like to pass on to an entrepreneur in the audience?
I think to rethink their need for funding is actually a really important thing. So I go into this in some detail in the book, that people have been sold on the Silicon Valley dream of the only way to build a business being to raise funding or go off to achieve a big exit, but actually question whether that's something that you're into. Maybe you'd rather just run your business your way, and having investors on board is going to take away some of the things that you really enjoy about running your company. Being able to run it completely your way and taking a random day off every now and again. Some entrepreneurs want to run things that way, and they never see selling their business as being in their future. I think equity crowdfunding and any kind of external investors will keep your feet to the fire for growing. But if growing at all costs isn't really your thing, and you don't want that extra discipline that comes with it, then try to expand through other methods, bootstrapping or just selling more things to customers. That's a perfectly fine way of growing a business.
That's a really, really great observation. I think that particularly with like Kickstarter, Indiegogo, everyone thinks like, oh, this is free money. Well, no, you have to ship out your products to your customers or your backers. With equity crowdfunding, people might be thinking, hey, this is like free money. No, it's not. You have obligations after taking that money to grow to a certain degree, to either sell your company or go IPO. You have the duties to your investors, your shareholders now. So I do think what you said, that it's a decision that you shouldn't make lightly, is very true. Particularly since you're growing a company over the span of like 8 years, it really does change your life in many ways. I personally love my lifestyle business right now. I might be doing, a tech startup in the future, but I've made that decision for my business. So if you're out there listening, definitely a question to ponder. Nathan is a wise man. The last question that I have for you here, I want to get a sense of the climate, having spoken to all of these different platforms. So what are they anticipating in the future? What is their view of how things are playing out? Like, what are they expecting for the equity crowdfunding industry?
I think an expansion beyond the startups and growing companies is the biggest change that we're going to see in the industry. I think the need for equity crowdfunding was strongest in the startup world at first, because it was where the greatest pain point was. We had venture capital firms refusing to fund companies at the seed round. We've got banks in the wake of the global financial crisis being less willing than ever to take a risk on startups, or requiring collateral if they do. But equity crowdfunding has many more applications. So one thing we're seeing in the UK, for example, there's a platform there called Syndicate Room, which I mentioned earlier. They're helping now to facilitate full initial public offerings.
Wow.
So we'll see these full prospectuses, which is the word for a really time, cost, and lawyer-heavy document, which is necessary to prepare to do a full IPO, being now hosted on crowdfunding platforms. And we'll see more later stage businesses. Like there's one called Brewdog, which is a UK beer company. They raised $50 million through a crowdfunding offer. So wow. I think it's an expansion beyond the pure seed stage or very early stage companies is the thing we're going to see in the near future.
And was their campaign on Syndicate Room? I just wanted to include them in the show notes.
Brewdog was on Crowdcube.
Okay, I really got to check that out. That's a tremendous raise. That's so cool to me. It's sort of like scaling up in some ways and being able to solve more problems for entrepreneurs, because obviously technology makes it so much easier to not just connect with investors, but to tell your story. So it makes like complete sense to me that we could see that in the future. So where can people check out your upcoming book, which is coming out on November 1st?
The best way to go is to go to assembleadvisory.com/book. And that'll have the link to the Amazon page. And I'd just like to say, Salvador, that for your listeners, if they go there on the first few days, as in immediately after November 1st, the book will be able to be downloaded for free. So that's an offer I'm making to get the message out there to as many startups and growing companies as possible. So check it out for those first few days. It won't be free forever, but take advantage.
Nice. And will you announce that on your email list?
Absolutely. So if you want to get onto the email list, I'll keep people informed in the lead up to.
Okay, and you also get a free sample chapter now by subscribing. So that's a really extra bonus incentive to get on the email list. But Nathan, thank you so much for coming on the podcast. This has actually been a lot of great information. I myself am also learning as equity crowdfunding is growing, so I appreciate you sharing your knowledge with the audience and also with me.
It's been great, Salvador. I've really enjoyed our chat. Thanks again to you.
Thank you for listening to this episode of the Crowdfunding Demystified podcast. Again, my name is Salvador Brigman, and I hope you enjoyed my conversation with Nathan Rose. If you want to learn more about equity crowdfunding, go and pick up a copy of his book, Equity Crowdfunding, The Complete Guide for Startups and Growing Companies, and you can check that out at assembleadvisory.com/book. If you did enjoy this conversation, also, I would really appreciate it if you could take a second to rate and review this podcast on iTunes and also hit that subscribe button. So if you're on your smartphone, the way you can do that is open up the podcast app, hit the search button, and type in crowdfunding or crowdfunding demystified. My podcast will come up, and then from that page, you can leave an iTunes review there. If you're on your desktop computer, you can go to crowdcrux.com/rate on iTunes. That is crowdcrux.com/rate on iTunes. Thanks for spending a little bit of time with me today, and I'll see you next time.